Good morning. This is George Tkaczuk with Know Your Options Inc., reporting to you from the CME Group trading floor in Chicago. Two things I want to talk about this morning is state of the current equity market and then some possible plays on this market. So right now, our market timing signal puts us still in a cautious uptrend. Now, the reason it's a kind of cautious uptrend is we had some really good price action in the general indexes, namely the NASDAQ, the S&P 500. However, what we haven't had is volume confirmation of this move. Although off the low that we set November 16th, we've been up 8 out of 10 trading days, and each one of those days, the NASDAQ has pretty much happened to close at its highs, which is really a good signal. But the problem is, even after that follow-through day, which we called November 23rd, is we had some pretty heavy selling last week, 2 days on the NYSE, and 1 day on the NASDAQ and the S&P 500, where volume came in greater and the market sold off. However, though, the market has been able to move a little bit higher. So what are we looking for here? Well, okay, the NASDAQ was able to cross its 200-day moving average, stay above 3,000, which is really a good sign. So we're looking how it's going to meet its resistance at the 50-day moving average, which is about 30.20. And that's right, this morning, actually, the NASDAQ was slightly above it, and now it's turning down. So it's going to be key. If the NASDAQ market wants to move higher, it's got to cross this 50-day moving average, and again, we'd like to see some volume confirmation on this. So right now, we might be stuck in a range between that 50-day at 30.20 and 3,000 to the downside. Now, if the NASDAQ breaks the 200-day moving average, which is about 29.87, you might want to consider going short this market and saying, we don't think this rally is going to work. Now, the S&P 500 is acting a little bit better technically. It's been above the 1,400 level. This morning, also, the S&P got above its 50-day moving average at about 1421. It stayed above there for a while, but again, turned down. So again, if this market has legs, we got to cross these 50-day moving averages to the upside, and we'd like to see some volume with this move. However, the market still hasn't tanked this morning, and even though disappointing news this morning at an ISM manufacturing number came in at 49.5, slightly below 50, which above 50 always indicates the economy is expanding. Below 50, the word is that it's contracting. And of course, the consensus estimates were for 51.7. So that's a pretty big miss. But on the up-hand side, construction spending grew 1.4%, which was a big surprise, which brings us to the next segment. In this market, we're looking at industry groups. And of course, I've talked about this numerous times. Money still seems to be flowing anything related to building, whether it be home building, the material companies, and so forth. Medical stocks are slightly slipping, as are tech stocks. And again, most of the money is moving into building stocks. So we got our eye on two stocks. I don't own them yet, but we're looking to buy them, possibly home builders. One is Ryland Group, symbol RYL. And if you take a look at a chart of it, it's pretty much clinging to its 50-day moving average. 2 weeks ago, it had a nice shakeout, meaning it dropped below this average and retraced that whole move, got right above that average. So if you're an aggressive speculator, you can buy that stock right here. It's at about 33.45 and use 32.45, 32.50. That's a 50-day moving average as your stop if it doesn't work out. Or if you wanted some good confirmation, wait till it breaks past its recent high, which is 35 and change, somewhere around there. Another home builder in that same space is MI Homes, symbol MHO. It also is riding right along its 50-day moving average. It also, about 2 weeks ago, had a big shakeout. It dropped way below this average and just turned around, went right up above it. So again, the aggressive speculator, you can buy it right here, use the 50-day moving average as your stop, or wait to see if it takes out its recent high, and I believe it might be about 22.13, something like that. Okay, so let price and volume be your guide. There's no reason to rush into this market. We are in an uptrend, but it is this cautious uptrend. So be careful, and again, if you see the market fail, you might want to forget about these trades and start going short. Thank you. This is George Tkaczuk, Know Your Options Inc., coming to you from a CME Group trading floor in Chicago. Have a great day.